Good morning, good morning, good morning, everyone. My name is Don Daniel, founder of P.I.L.L Method International, a better way to eliminate debt. And today we're going to be talking about the amortization formula. Now, why is that? The formula, the very formula that the bank uses so that they can charge you interest. If you're looking online, if you're watching this on YouTube, you can actually see the formula. So I'm going to put the formula in the chat so that you guys can see that. Hold on for a second. I'm gonna put the formula in the chat so you can see it. So let me break this down. If you're on Clubhouse, all right. So we're gonna put that in the chat. Break that formula down so that you can know what's going on behind the scenes. So let me see. Where's my notes? There it is. All right, thank you so much. There's the formula. We're putting it in there. Can you also put that in the private so that I can easily copy it? Thank you very much. There we go. Hey, man, listen, I love it. All right, so we're going to copy that so you guys can see the formula. All right, copy it, and we're going to put it in the chat in Clubhouse so you guys can see it. Here's the formula. This thing makes a lot of money. I mean, a ton. And we spend absolutely no time talking about it and how to figure it out. But there it is. That's the formula, everybody. That is what the bank uses to charge you all of that interest. So if you want to see what we're talking about, if you want to see it, you want to go to YouTube on a secondary device and then pull it up so you can see what we're talking about. But right now, I've got to get it on my screen. All right. And formula. All right. There we go. Amortization formula. All right. And we're putting it on the screen. And let's share the screen here. Present. All right, share screen. There it is. All right, great. All right, so now I have a video. It's a short video. We're not going to watch it today, but if some may be interested in how the formula breaks down, but I'm going to go over the highlights. All right, but here is we're going to post this video. All right, we're going to post this video, copy this. Here's a video. It's a short video. It's only 5 minutes. You want to watch this? I'm putting it in the chat here also. And we're going to put it also in the comment section so you guys can see it. Here is the video. All right, there's the video, ladies and gentlemen. We have the video for you. So it's a 5-minute video that says, how do we use the formula itself? How do we use this formula to figure out our mortgage payment? All right. And what it does to the mortgage situation and how it breaks it down. All right. Can I give you like an overview without getting into, because listen, what we could do is take this formula and plug in all the numbers and do the math. We could do that. All right. But this is why I gave you the video so you can watch that on your own time. But I'm going to give you an overview of what's happening here. Now, the reason why we're going to give you an overview is this. Everything we do is about money. All right. I mean, if you drove a car to work, if you put gas in the car, if you have a house or an apartment, if you're buying food, if you use a credit card, if you use student loans, all of this thing has to do with money and banking. Okay. And we're in a system that thrives on an understanding of money. If you understand how money works and how leveraging money works, you're either leveraging, watch this now, listen to this, you're either leveraging or you're being leveraged. You're either leveraging something or you're being leveraged, meaning, how can somebody who has a lot of money? Oh, thank you very much. So listen, you go to YouTube, you better subscribe. We're getting those subscribers up. So the banking system says, how can we use our money to make more money? What are they leveraging? How does a bank leverage? Okay. Now I know about borrowing money. If I borrow money to buy a house, I can rent that house out. I can make money with that house, and I can take the money that I make to pay the loan back eventually and be done with it. Now I have an asset that makes money, but I use somebody else's money. I leveraged somebody else's money to make more money, right? But since the banks have all of the money, what are they leveraging? What are they leveraging? And some people might say it's our money. Yeah, it goes deeper than that. You know what they're leveraging? They're leveraging your time and your talent. Your time and your talent. Your time spent at working, whether it's working for somebody else or working in your own business. But you spend time working. The time that you spend working is turned into dollars. It's turned into money. So here's what a bank does. It says, what can we leverage? We're leveraging individuals. Now, I'm not saying it's wrong. I'm just saying this is what's going on. They're leveraging individuals so that they're saying, if you want to get along in life, education is so expensive. We will lend you the money so that you can get your education. And then once you get your education, then you can pay us back with interest. So they're leveraging your time and your talent to make more money. They're leveraging you. Okay. So if you buy a car, now you need a car to get back and forth to work. So what does the banking system do? They make it available. They make money available so that you can buy a car. All right. You can buy a car. Once you buy the car, now they're leveraging that. So how can we leverage that so we can make more money? A house, a fence, a credit card, your vacations. So the banks are saying, I need a formula that's going to help me leverage them in a way so I can make money. Now, let's just say I'm going to put a calculator on the screen here. Okay. I'll put a calculator on the screen and I'm going to put in $200,000, 200,000. Okay. If you want to see this, go to YouTube, but this is going to be easy. $200,000 and the interest rate is 6%, $200,000 at 6%. So what is 6% of this? So we're going to multiply this by 6%, 0.06, and it comes to $12,000. So if you bought a house for $200,000 from the bank over a 30-year period, and it's at 6% interest, 6% interest, the way that we're thinking about it, is only $12,000. But somehow, using this formula that's right next to this calculator, they're turning the interest that they're going to collect over 30 years, they're turning it into $231,000 using this formula. Okay. How do they get something where you could take 6% of 200,000? How does this formula do this? So now I'm paying over 200,000. Well, listen, let's do this as well. Let's compare. I'm going to put this into an amortization schedule, $200,000, and you can see what I mean. $200,000, and here's how much interest they want. $231,676. That's 115% of what you borrowed. What does this formula do to make that happen, ladies and gentlemen? Could you hold on for just a second, please? I went off camera for just a second because when I get into the office, don't tell anybody, but when I get into the office, it's cold in here. So I turn the heater on while, we're getting everything ready for the show. And sometimes I forget to turn the heater off and it gets too hot. So I had to go and turn the heater off. All right. So anyway, so now when we break down this formula, and that's why I want you to watch the video. Okay. Because this formula says this is going to give us a payment we can afford. A payment we can afford. Now, the payment on the mortgage I showed you is $1,199.10. But if you take the rent on a comparable size house or apartment, in most areas, the rent is more than that. So you're looking at the total payment. Is it a payment I can afford? The answer is yes. Is it in most cases? Am I faced with paying $1,199.10 over here for my own house, or I can pay $2,000 a month for somebody else's with no guarantee on how high the rents can actually get? So if I buy a house, I know that my house is going to cost me this much money per month until I either change the contract or I pay it off. But it can't go up. So if I'm going to pay something, why not get a payment I can afford? And then I'm good. I'm good, right? So here's what this thing does. It gives me a payment I can afford, but it is very, very expensive to maintain. And that's what the formula does. Here is a breakdown of the formula. The formula does this. It makes sure that you're not charged on the $200,000. If you owe $200,000, it will charge you on the $200,000 one time. That's it. They will charge you $200,000. They will charge you on the $200,000 that you owe one time. How do they do that? This formula, if you string it out, you'll find out that this formula will cause you to take your interest rate and divide it by 12. And you're going to take 1/12 of the interest rate and multiply it by your balance one time. And then you'll figure out how much goes to interest one time, and then how much goes to principal one time. Now, if some money goes to principal, do you get a new balance? Is there a different amount of what you owe? Let's pull this up. Let's break this down this way. You can see on the screen, let's go ahead and make that bigger. You can see on the screen right now, ladies and gentlemen, that a small amount goes to principal, but a large amount goes to interest. All right, let me invite a few more people in here on Clubhouse. All right, there we go. And they see the word formula and they think I'm going to do a whole bunch of math, and it scares people. But we need to invite folks in. All right, Dylan, help me out. Invite some people in here. Click that arrow down there and share on Clubhouse. All right. They think I'm going to take them to math class. That's why they're hesitating, or maybe they're just going to go over to YouTube and watch it. They could do that too. All right. So here we go. We just shared this out on Clubhouse. We actually have more people watching us online than we have listening to us on Clubhouse, because they want to see this. They want to see these numbers. So here's what happens with that formula. You're charged on your balance one time. the $200,000 you charge one time, and then they break down how much goes to principal and how much goes to interest. So then the formula goes to work on how much you owe next. So what you have left is $199,800.90. Then the formula says, okay, the formula looks at this as, here is your new mortgage. Because see, listen, part of the formula is the number of months involved. And 360 is plugged into this formula. But do you see that there's a -1 here? Every single month, all right? It ratchets down 1 month, 1 month, 1 month. So you go from 360 payments, then the next month is 359 payments, then 358 payments, then 357 payments. It doesn't have to do that. It's designed to do that. There's more than one way to charge interest, ladies and gentlemen. This is just one way. But this is the most popular way around the world. So it ratchets down each month. 1 month, we're going to charge you 1/12 of the interest rate. And then what they're hoping is that you'll follow their game plan and put $199.10 on how much you owe. All right, $199.10. That leaves you with $199,800.90 right here. And then you get a brand new mortgage. But it's based on the 360 minus 1. This thing is brilliant in making money. Okay. Now, when you do the -1, now we take the same formula and then it multiplies 1/12 of the interest rate by the new balance of $199,800.90. That gives you the new interest charge on line 2. But it's going to be less because you don't owe as much. Then that money that used to go to interest shoots over to the principal side, and now you're paying $200.10 in principal, and they subtract that from the $199,800.90, and you're left with the brand new mortgage because it's -1 again. All right. So now we had 360, we have 359, now we have 358, because each month it's -1. It's -1. All right. So now we have $199,600.80. And then I would take that 1/12 of the interest rate and multiply it by this new mortgage. And on and on and on. You have a new mortgage. This thing is set up so that you can have a new mortgage every single month for 360 months or for 30 years. Okay. Now that's what the formula does. When you take a look at this formula, it says, okay, boom, 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 boom. Every month we want to charge. Every month we're going to charge. Every month we're going to charge. Well, what do you want to change in this system? If you were going to change something in this system, ladies and gentlemen, about how often they could charge you, all right, or they're going to charge you every single month on the unpaid balance, they can't change the formula. So what are some of the things you can change? Maybe you can change the interest rate, but they're still going to charge you 360 times. Maybe you can change the amount that you're borrowing by putting a large down payment down. That would save you some money. Yes, it would. But that formula still charges you 360 times. So what do you really want to change that's going to make a big difference in the amortization formula? How many times they can charge you. Doesn't that make sense? If you take a look, this is the weakness in the formula. This is why it's not taught in school. This formula guarantees that whatever it sees, it's going to charge you that month. And you'll pay whatever it is you're supposed to pay that month. All right. So let me show you what I'm talking about here. I've got a $200,000 mortgage. Okay. And my interest rate is 6%. That means 6%, 0.06 divided by 12. This is what the formula does. This is their magic number, 0.005. This is the number that they're using, not 6, but 1/12 of that interest rate, which is 0.005%. And that's what they multiply. So if you allow them to do a step down method based on their timing, you're going to apply that formula to how much you owe 360 times. And in the first months, a whole bunch of your money goes to interest. And every month you get a new configuration. Your payment stays the same, but you get a new configuration, and more goes to principal and less goes to interest. Every single month, they're stepping down. This formula allows them to step down 360 times. Let's see if we can, now I need you to watch this video. It's going to make it clearer. Let's see if we can disrupt that timing and change how much we pay by disrupting the timing. Okay. So once I make this mortgage payment, here's what the bank is looking at: $199,800.90. So we're going to take their magic number and multiply it by this number, $199,800.90. So we're going to do that. Multiply by 199,000. If you're new to the room and you want to see this, I see Sandra just popped in. If you're new to the room, you want to see this, go to YouTube so you can watch this on your other device. You may have another phone, a tablet, or a laptop or whatever. Go to YouTube, search for P.I.L.L method on YouTube, and you'll see us live right there. And you can see the numbers I'm talking about. All right. So, but if you can't see it right now, you might be at work. It doesn't really matter. You can always watch the replay later on YouTube. All right. Subscribe to YouTube for us. Like the videos. All right. And share this stuff. Share it with others. So I have $199,800. Okay. And 90 cents. Now remember, here's what the formula is saying. Every month, we're going to charge you 1/12 of the interest rate. We're going to subtract what you've already paid, and then we're going to hit you again. All right. Now they've subtracted the $199.10. So now I'm left with this. So now they're going to multiply it by the 0.006. I mean, 0.005. And now here's what I get: $999 for interest. If you look at line 2 on the amortization schedule, you see that $999, but it's based on what the computer sees at the end of the month. You can control what the computer sees. Did you know that? You can control that. This is why it's not taught in school. Anybody, if you're in Clubhouse, go ahead and come to the stage. You can ask some questions. All right. And if you're online, you can post some questions in the chat, in the comment section, or your comments about what you're learning here today. Okay. So this formula causes that. Let's go back to the formula. This is the formula that causes it to step down each month. I'm going to charge them. I'm going to charge them. I'm going to charge them. Now, they're locked into that system. They're locked into that system to charge you once a month. All right. Yamil, I see you're in here. You know that we're on YouTube and we're showing this thing. Okay. All right. So now here's what's going on. What if you decided, I don't want them to charge me on the $199,800.90. I want to disrupt their timing. I'm going to look at what they thought they were going to get the next month. Next month is $200.10. Now, you can what's called a prepayment. Before your next payment is due, you can give the bank any amount of money that you want, even if it's a penny. But let's just say I'm picking something that's easy to see. The P.I.L.L method is not what I'm describing here. We're just describing how an amortization schedule actually works to be able to charge you 360 times. So if I give the bank what they're looking for early, they're looking for the $200.10 next month, but I'm going to give it to them in the same month I made a regular payment. $200.10, I give it to them. Now they have to subtract that from what I owe, and now I owe $199,600.80 because I gave it to them early. Because they use this formula and it automatically steps down, their computer sees this number, $199,600.80, instead of what the bankers had anticipated. They thought they were going to be able to charge you on the $199,800.90. But now they can only charge you on this one. So let's get our calculator back on the screen. Let's clear it out. Here's our magic number. On 6% divided by 12, it's 0.005. That's our magic number. And now we're going to multiply it by this number, $199,600.80, because that's what the computer sees now. Okay, so let's multiply it by $199,600.80 equals $998. That is the payment on number 3, line 3. Here's what you're doing. By disrupting the number that they were anticipating, the formula can only charge you on what the formula can see in the computer. The computer can only see $199,600.80. So that's what it charges you. And so it gives you the payment on line 3. So the computer had no other choice but to eliminate line 2 from the schedule. And because of that, you're saying, yes, it's based on 360 payments, but we just tricked the computer into thinking that it only has 359 payments to make now. Not 360, but 359 payments to make. And so now can only charge you 359 times instead of 360 times because you gave them the money early because of the formula. Remember, it's a step down formula by 1 each month, but you can control how many times that step down actually happens. Oh my goodness. Did you know that? I get excited every time I talk about this. All right. And I'm not good at numbers. Okay. Never have been, but I like puzzles. I can see things. I can see the formula. And in my head, this is what it's saying. This complicated thing here that takes me months and months and months to try to figure out. I've been watching the videos, but when I boil it down to the concepts, all they're saying is whatever the bank sees, we're going to multiply it by 0.006, and that's what you pay. All right. So what would happen? What would happen if I do this? Okay. All right. Hold on for a second. All right. I need you guys to hear this. All right. I need you guys. I'm going to put it on speaker. Somebody's calling me while I'm on my show. All right. Sean Lashley. You're on speaker. You're on speaker right now. And your voice is going out to my whole show, because you know this is the time I do my show. You should be in the show. All right.
Now you are one smart cat.
All right. Listen. Come into Clubhouse. All right. And then you can talk to me about what you want to talk to me about. I put you on blast. I just did that. Yes, sir. All right. See you in Clubhouse. How you like that, ladies and gentlemen? Listen, live video. That's 10K. So I'm going to put my 10K card at the top of the room here. ICE. All right. ICE 10K. All right. 10K.com. There we go. That's my 10K card. And 10K is the founder of that. All right. So we're going to invite him up. All right. And so, man, why are you trying to call me in the middle of my show and try to disrupt my flow?
Because when your team member called and made a request, I want to check with you first. so after there's protocol around here.
Exactly.
So after the show, we're gonna chop it up for like 5 minutes.
Right.
That was a great thing last time, man. I love it. Great audience.
Man. We had a good time last night. Folks, what 10K is talking about is last night we had a training for the affiliates last night, and it was a stupendous success. Okay. And Ian Pedley, he's watching us from Australia, Sean. Ian Pedley says, hi, Sean.
What's up, Ian? What's up, man? Welcome to the room.
All right. So yeah, somebody just asked me, just again, they know I'm in a show right now. All right. Meet me on Clubhouse.
Don, one of the things you want to do whenever you're on the show, someone call you or text you, just send them the link to the room. That's it.
Just send them the link to the room.
Just send them the link to the room. That's it. You wanted to talk me to here. That's it.
All right. So listen, I can copy the link.
Yeah, copy the link and just put it on keep it as a shortcut.
There you go.
But Don.
Yes, brother. Talk to me. Oh, he just got a phone call. All right, ladies and gentlemen, here's where we are with this with this whole thing. Okay, what we're doing is this. We're doing this. Here's the formula. The bank is charging us each month, and we're learning how if the bank constructs the formula this way, and you understand the formula, you can deconstruct their loan. You can deconstruct how they are charging you. You can deconstruct what is going on here. Okay. You can deconstruct it. Okay. By deconstructing it, you can change how much interest you pay and how much of your money goes to principal. All right. So now, what did we just learn? By giving the bank the $200, their magic number in the formula is 0.005. 0.005. Okay. And then they have to multiply it by whatever it sees. So what if I do this? I make one payment. Okay. I take a look at the amortization schedule. Now, remember, you don't have to do it this way. You can pay anything you want. I'm just using the numbers this way because it makes it easy and we don't have to do a whole lot of math. What if I wanted to give them the $200.10, the 201.10, and the 202.10? I'm going to give them 3 principal payments on top of that. They have to subtract $200.10, then they have to subtract the 201.10, and they have to subtract the 202.10. And then guess what? I'm now left with this number for the computer to see, the $199,197.60. That's what they see. That's what the computer sees right now. So, ladies and gentlemen, based on the formula that steps down by 1 every single time, based on what the computer is able to see, how much interest can they charge you now? Well, it's not hard. I see $199,797.60. They take their magic number 0.005 and multiply it by what it sees now. And it sees, I gave them these three. I gave them this three. Let's see. I paid this one and I gave them three more. 1, 2, 3. And now I owe, let's see. Now I owe this. All right. 197,000. Okay. All right. Boom, 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 boom. All right. That's what they see. 197,197.60. So I'm going to multiply that. 199,000. Oops. Back it up. All right. 199,197.60 times 199,197.60 equals 995.99. 995.99. Look at it. Look at this. Here it is. I'm actually on line 5 now in my amortization schedule because of the step down nature of this formula. If you're new to the room and you want to see the formula that we're talking about, okay? Hi, Nabia. Invite her up to the stage. Hey, D, what are you doing in here, D? Come on up to the stage. All right. So here's what we're seeing, folks. I need you to go back. All right. Because of the step down nature of the formula, they have to do a -1 every time. So now that they see that I owe 199,197.60 and they use their magic number, now I pay what's on line 5. That's what the bank sees. This is what they charge me. This is the only thing they can charge me. So then here's my question. What happens to the 3 principal, the interest payments here? The $999 is gone. The $998 is gone. The $997 is gone. The only thing that's left is the $995.99. And that's the only thing they can charge me because this is what the formula says. Is this beginning to make sense to you now? The formula says you can only charge me your magic number on what you see, and I pay that instead. But if I allow the bank to do 5 step downs instead of 2 step downs, watch this, then I'm going to give them the next month, I'm going to give them the $200.10 plus $999. I give them the $201.10 plus $998. I give them the $202.10 plus $997, and then I get to the $995.99 because I allow them to step me down 5 times. But by giving it money when I want, I could pay this one, give them the $200.10, the $201.10, the $202.10. That's $603.30 if I add it up. Let me look at my bank account. Do I have $603.30? Let me look in there. I look in there. Yeah, I got $603.30. I give it to the bank. They have to subtract it from what I owe. And then the formula goes back to work on the $199,997.60. And it gives me this payment here. So for $600, I save nearly $3,000 in interest because of that. Because of this formula, because of the step down nature of the formula. Do I have any questions or comments about that? Miss Nabia, how are you this morning?
I am divine, sir. All is well.
All right.
Is well.
Are you? Do you happen to see? Are you happen to be able to see our YouTube channel right now?
I can pop in there real quick. Yeah, I didn't turn it on.
That's okay.
Moving around.
That's okay. That's okay. You can move around, but I'm showing what I had. I put a link. I put a link in the chat. All right, a YouTube link. It's a 5-minute video that explains how the bank uses the amortization formula to charge interest. All right. And then they use a formula that uses a -1 formula, but it's based on 360. In this case, 360. And I get to charge you every single month I see a payment. But the bank schedule is, if you follow my schedule, I get to charge you 360 times. We just showed how we can get 5 months into your loan by fooling the computer into thinking it just not stepped down 5 times to get to a certain point. It only stepped down twice because that's the number we gave it. And then when it stepped down to line 5. This is where we are now. Ladies and gentlemen, this is fundamental. The formula can only do what the formula does. But if you give it a new number, it has to charge you what it sees. Does this make sense to you? Put a number 9 in the chat if this makes sense. Put a number 5 in the chat. I'm not getting it yet. All right. Online. All right. Number 9 if you get it. Number 5 if you don't. Number 9 if you get it. Number 5 if you don't. And I need you guys to do that on if you're watching us online as well. Okay. All right. I'm getting a bunch of 9s. All right. And I got Demetrius Curry in here. All right. She is don't tell her I said this. Uh-oh. Now she's on stage. Now she's gonna get me. Demetrius, how are you doing this morning?
Good morning. Can you hear me?
Yes, I can.
Greetings, everybody. I'm sorry. What were you finna say, Don?
Listen, I was fitting to say that when it comes to understanding money and making money, all right, you are our shero.
You're so sweet. No.
You are our shero when it comes to understanding money and making money. Listen, the insurance, she's there. Okay. Lending money as a mortgage lender. She's there. Okay. And now she's probably getting ready to listen. And then she sent something out to her whole network yesterday. All right. And I saw it. That's why I called you.
Oh, goodness.
And I said,
Okay.
well, let me catch up with Demetrius. All right. Let me catch up with D. Because she sent something out to her whole network. What did you send out to your network yesterday, D?
My team actually sent out something to our network to let them know that we're doing a training real estate formation webinar tonight online. And so a 2-hour training of forming your business, what your documents are supposed to look like from a lender's perspective. As you know, I'm a lending broker.
Yes.
And we negotiate with over 100 lenders across the country. And as a broker of 30 years, what I do is when I work with the buyer, I go in and make sure that their mortgage, their investment property, and I only deal with commercial business owners. So if they're buying investment properties, Airbnbs, etc., then I negotiate that contract with that lender to make sure my buyer is getting the best deal possible. So I did a webinar coming up tonight, and they did a blast yesterday to let people know, hey, if you are in the midst of trying to learn how to be a real estate investor, or you're just getting turned down for loan after loan after loan, it may be in your documents. Let us tell you what it's supposed to look like. And so we're going to do that later on tonight. See how you put me on blast first thing this morning. I haven't even had my coffee yet.
Listen, because I can do that. So is this only open to your friends and family? I just want to know.
No, absolutely
not. You mean the folks that follow me can come?
Absolutely.
So is there a link that you can put in the chat?
I surely can. I'll put it in there now. You're so sweet. Thank you for doing that. Absolutely. I'll put it in there in a few seconds.
Look, listen.
That's what Don does.
Come on.
Share the wealth.
Come on, Nabia. Come on.
I just followed you, by the way. I'm a realtor here in Florida.
Oh, wonderful. Yeah. Wonderful. Yes, I love my realtor family, please, because what we like to do with our database, when we help our clients, I tag those realtors to that database so you can see them going through the process if they've gotten approved, underwriting, wait on appraisal, whatever it is, and you can actually get an update yourself and say, "Oh, they're moving. They're almost to closing. Yay." And to help you track your money as a realtor. So definitely connect with me. So if you just send anybody our way, you can see what's going on with your client.
Okay, thank you so much. I appreciate that. And I'm just going to take this moment to say you sound like a future guest on my YouTube channel.
Oh, what you
Listen,
say?
stop making
You
these
sound
connections
like
on my
Don's been
show.
on there.
Stop making connections. I want
Don's been on there.
10%. I want 10%.
10%. Okay, Don's
Listen.
prices are going up and so are tithes in the church.
Yes, that is so true. And listen, this
Yes.
particular workshop tonight, I
Yes, ma'am.
reduced it just because there are so many like first time investors, and they
Mm-hmm.
was like, I'm just starting out. I said, listen, you're talking about a really $450 worth of ticket information. I'm going to reduce it to $47 just for you guys to get on in. So
What?
I just reduced it this week to $47 just for those that didn't missed it, didn't get the last one, so they can jump on in. So yeah, I just put that link in the chat. Yeah, now.
Wow.
Listen now, Don.
Yes, ma'am. Yes, ma'am. Yes, ma'am.
And
Listen, Don.
he needs a good talking to. I'm listening. I'm all ears. I want to hear
Listen,
this.
listen, Don. At the end of this workshop,
Uh-huh.
I'm gonna give some bonus information.
What?
And it's not part of the formation of the documents and everything. It is the behind the scenes, what the lenders use in matrix system to determine whether you are eligible for lending.
Wait a minute.
And
Wait a
it's
minute.
going to be
Wait a minute. Wait a minute. Because listen, you're using that language, and my brain doesn't move that fast. Are you telling me? Are you telling me that if I know what they're looking for, I can control what they see?
exactly.
What?
Exactly.
Break that down for us.
Wow.
Break that down
Wow.
for us.
So if you are an investor and you are like, hey, I just want to buy a long-term rental. I just want to buy a two-story, maybe not even a two-story. Let's just say a single-family residence. I want to buy a single-family residence and $300,000, and my credit don't look what it's supposed to look like, but I know I have good business credit. Maybe I need to get another property underneath my belt. What do I need to submit, and what does it need to look like? Well, first off, if you know what they're looking for, you can help you. So let's talk about the matrix system, and keep your eyes on that word matrix. The matrix system is a universal term used through the lenders of what type of guidelines they use to determine if you're going to be able to get funding with them. Okay. What that goes down to is a slew of items inside of a database. What type of property it is, location, the amount of the loan to value, appraise value. It wants to know what your ratios are, your debt ratios. Okay, what is the ability of this property to make money for you? Can it actually make good return? Cash flows, is that possible? Right. So all of those items are going to be in this matrix system, and I'm going to show them what it looks like. And I'm going to blur out all the lenders so you don't see their names, but I'm going to actually show them what it looks like from lender to lender to lender to lender so that they can see, look at this chart. Now let's go across the chart and all these different columns in this spreadsheet. And it's going to be a long spreadsheet, but we're going to focus on certain areas. And I'm going to say, look at what they are able to lend on. They look what the credit score requirements are per lender. Look and see what exactly you need to submit for that type of loan. Look and see what they consider as a null and void. You are automatically not qualified because you've had foreclosures in the last 2 years, bankruptcies in the last 4 years, et cetera, et cetera. All of that is in the matrix system.
Wow, wow. Sandra Gibbons is on here. So, Miss Sandra, thank you for being here. She says she's got to go. She's going to listen to the rest later. Thank you for being here this morning and listening to us. Listen, D, that is huge.
Mhm.
That is huge. So, may I try to recap in my own feeble way?
Absolutely.
So, so
Absolutely.
what you're
You
saying,
you do that.
what you're saying is, if I know if there's something that's true about me, okay, but I don't necessarily need to have it on the application that so it won't help me, I need to leave that
Mhm.
off.
What I'm telling you is this.
Yeah,
Certain things may not apply.
right. May not apply.
Do not, yeah, may not apply.
Mm-hmm.
Do not give more than what you're supposed to give.
Ooh wee. Ooh wee.
Now, and that's vitally important. So let's talk about. And I don't want you got something else going on here. We talking about something else now. We didn't change your whole scope of your talk this evening.
Listen, that's what live video is all about.
That's what live video is all about. So look, thank you for letting me, insert this information. But
Yes.
this is part of what you're doing because I'm on the pill method and have been on the pill method for years, and we'll talk about that too. You
Oh,
guys
well,
are
you can you,
amazing.
you can re, you can repeat that part.
Listen, amazing. Absolutely. My husband and I love the Pill Method database. As a matter of fact, I just finished updating my stuff yesterday and I saw y'all got some new updates out there, but we'll talk about that too. Yes, I love the new technology you guys just put in there too. So crazy. Thank you for that, sir. Kimasabi. I appreciate
And
you.
can I ask you something?
Yeah,
How much did you pay for those new updates?
nothing.
Ooh, how about that?
I didn't pay anything for no new updates. What you talking
Come
about?
on now. All right. Go ahead and finish what you were saying because now I got to get.
That's the
No.
part where you say, wait a minute, wait a minute, wait a minute,
Wait a minute.
wait a minute,
Wait a minute. Wait a minute.
Wait
wait
a
a
minute.
minute,
Wait a
wait a
minute. Wait
minute.
a minute.
All right, because I got Sean.
I
I got
logged
Sean.
in. Listen, guys,
Yeah.
I logged into my online private login to
Yes.
the Pill Method to add in some additional payments that I made, and then a video popped up and say, "Hey, welcome back. We have some new updates for you. Let us tell you what is new to the Pill Method system." And I said, "Oh, look at him. Okay, right." And so we went through the video, and before I even got a chance to go through the video, I could already see the new updates because I was going through the screens, and I was like, "Oh, okay, so this is user friendly. That's more user friendly. That's more. It's getting more and more and more user friendly. I absolutely love it." So the good thing about this particular database, and the great thing I would say about this database, is that it keeps me accountable. Oh goodness, it keeps me accountable of putting in what I need to put in. And if I skip something, oh, it'll hold you hostage and say, listen now, you didn't do what you said you was going to do. Either make an adjustment or tell us what you want to do, but you can't just leave it here. Okay.
Okay. Okay.
But I need that accountability. And because my husband and I, we in the wealth field, right? So we try to make sure that we are watching all our dollars, and we're in the process of building another home and all those other things. So we have to make sure that that stuff is paid off accordingly, so we can stay on our game plan.
So
Matter of fact, make sure Don, your
yes,
assistant, contact me for a meeting next week. Can we schedule that? I got some ideas I want to ask you about
I'm
before I
writing
go
it
to
down
the
now.
system. Okay,
Tarasa.
thanks. Yes.
Tarasa is my executive assistant. Okay. So I'm going to give
Yes.
this to Tarasa. I'm making a note now, and she's going to contact you to have a meeting with me coaching because so
Yes.
we provide coaching and all of that. Most people don't know that the business is a lot larger than me because we have a whole side of our business that just does customer service, and when you call the 800 number, somebody answers that phone
Yes.
and it ain't me.
Yes. Yes. And they're very good people. I
Hmm.
mean, they'll walk you through something like really quickly and so forth. But every once in a while, I want the Don Daniel touch. So I said, hey,
Lord have
let
mercy.
me call the source.
So
Listen. All right.
finishing up, you have
Yeah.
you want people to know that little bit about how they can help their
Yes.
applications.
Yes. Yes. So let me go back to what we were saying because, I get off on a tangent real quick. Listen. when you are doing an application, you got to know the game. And what we're trying to do is teach people the game. I mean, regardless of what type of sport you're playing, you got to know the rules of engagement, right? So if you are going into football or basketball or whatever, my son is a wide receiver. He does things with his high school and things of that nature. He plays cornerback. He has to know the rules of engagement. He has to know the plays. What we want to do is we want to try to give you guys the plays. And if you know that giving this too much information on here, that's not going to qualify you. Listen, give them what they ask for and what they need. I'm not telling you to lie on your application. We don't do that. What I'm telling you to do is only supply the information requested. Why you
Wow.
do that is because if you overgive what they're actually asking you, they can read into it and blur up what they're really supposed to be looking at. For instance, let's look at a DSCR loan. I know everybody on this line is probably familiar with
No,
DSCR loans.
no, we're not.
No,
Mm-mm.
DSCR loans are commercial application loans that you can get on a rental property. A DSCR loan does not care anything about your personal taxes. They don't care nothing about your personal assets. They don't care nothing about your personal income. Don't give them that because they're not going to use that to qualify you. What they're going to use is the property itself, the value of the property that you're purchasing, the capability of whether that property can actually do rent income in that area. And there is a way for them to assess that through the appraiser. Okay. And they want to see if this property can be profitable. Can it be a good cash flow property? For instance, here's an example. I did a property for a client not too long ago, maybe about 30 or 40 days ago. He bought $115,000 property. It's in his commercial name. He's using it as an Airbnb. 2 bedroom, 1 bath, just straight single family home resident. His mortgage with taxes and insurance, which is what they call a PITI, principal, interest, taxes, insurance, it only was about $700 a month. Okay. Now, this particular investor is pretty seasoned. He do this all the time, so he knows what he's doing. He put it on the Airbnb and Verbo market. When we got ready to do the application, we already told them that this is going to be an Airbnb property. So they assessed it to what Airbnbs are doing in the area. Okay. He's making anywhere between 4,000 to 5,000 a month profit on top of his mortgage. So his $700 that he's paying in mortgage for principal, interest, taxes, and insurance is being covered by his profitability of the cash flow on this property and then some. So that extra 4,000, 4,300, or somewhere in there, whatever that extra is cash flow profit. Now, why is this important when you're applying for a property? Because you have to know your numbers. And then you want to play around with what do you need that property? I want to buy this property and I want to get pre-approved financing for it. And this is what we're hoping to do for it. You know what I'm going to do? I'm going to look at that matrix system.
Wow.
And I'm going to pull out the matrix system and I say, okay, this particular property is going to require A, B, C, D, E, F, G. It's going to have credit score, great. She matches the credit score. The square footage, great. That matches the square footage of what that lender would do. But this lender won't do it. So let's just squash them off the list. Okay.
Wow.
Now, what would they require on cash flow? What ratio? 2-to-1, 3-to-1? All right. Based off of that area and the area assessment, it'll qualify for a 2-and-1 or a 3-and-1. Great. That means that lender can't do it. This lender can.
Wow.
So when I said
Wow.
I'm going to
Wow.
talk to you about the matrix system, I'm telling you what the matrix system is saying. This one can do it. That one can't do it. This particular lender can do single family residence. They can do townhomes. This one can do condos. This one can do multifamily residence. This one can do REITs properties. This one can do apartment complexes. This one can do resorts. But this one, and this one don't have the capacity to do anything that large. So I'm
Wow.
going to take them off the list.
Wow. Demetrius, that is huge. Hang out for just a second. Hang out for just a second. We got 10K in here. 10K cards. 10K. What is going on with you, my brother? What's going on with you today?
Man, Donna, I'm having so much fun, brother. After coming on to the call with you last evening, we put together a product that is so fire. So fire. And guys, speak to Becky, he'll talk to you about bread. Speak to that beautiful young lady, she'll talk to you about the matrix system. You speak about 10K, all I'll talk about is marketing. So when I
Hey,
came off,
10K, great to see
what's
you.
up? What's up, Queen? How you doing? How's everything?
Going good. Thank you so much for talking to me the other day.
Oh, you're welcome. I was on a call last night with Dawn, and we put together some phenomenal. First of all, it was a great call. Let me put that out there. Also, we put together a phenomenal product for you, Dawn. When you get off the phone and we go through it, and you see how beautifully it was put together, it's going to not only blow your mind, but you're going to have people lining up to become an affiliate of the P.I.L.L method. This is my commitment and my promise to you. You're going to have people lining up. You see the same way they line up to become a 10K card client? They're going to be lining up to be a P.I.L.L method affiliate. So we'll talk more about that when you get off the call. I'm just doing some more work in the background with my team. So when me and you speak, everything is all in place already. And then we ask a very powerful question. What is my custom link? So when I speak with you, we're going to cover that custom link in the conversation to get back an answer to everyone. Because all we need is all lights green to the P.I.L.L method highway. Back to you, Captain.
Thank you. See, listen, folks, at the P.I.L.L method, this is why we're breaking down the amortization. Put yourself on mute there, 10K. So what we're talking about today is the formula behind how the bank is using your loan to make money. And once you understand the inner workings of that loan, it is a step down system that charges you each month. And Ian Pedley was right. When I gave that last example, it is interest that you will not have to pay. The bank was looking for $2,994 by you choosing how to control what your bank sees. If you can control what they see, you can control what you pay. Demetrius is talking about the same thing. To get the loan, control what they see. Put it in the right hands so that you can get the loan that you're looking for by using her matrix system. And then we will work with you so that you can now, the money that the bank was looking for to charge you an interest, now you don't have to pay. You can cut your interest cost by 75%. Now, why is that important? Why is that important? Because of what Sean was talking about just a minute ago, becoming a P.I.L.L method affiliate. Becoming a P.I.L.L method affiliate, meaning I love this information. People need to know it. How can we get it out there in front of people? You click on my 10K card that's at the top of, and then you click on, I want to become an affiliate. Let's put that on the screen there. Kurt, we're going to put the affiliate information up. And so we give out this information every 3 times a week. 3 times a week, we're giving out information like this so people can know what is happening. And this information is unlike any other information to date. I'm going to tell you something that happened earlier today. I'm in the mortgage syndicate. And a guy asked me, how did I get started in my business? So I told him, and I gave him a little background. I taught him how to read an amortization schedule and what was really going on behind the scenes. I was giving him a preview of what we were going to be talking about today. He got it instantly, and he had goosebumps. I mean, he was so excited to learn this information. And I said, guess what? You learned in just a few minutes what a professor at UCLA told me can't be done. You see, the Bible says that the simple things will confound the wise. We're not getting all into the numbers. We're just getting into the formula itself, the way it works. So if I know that it's a step down system, and I know they can only charge me on what the computer sees, then I just have to control what the computer sees so they can charge me accordingly. That's the key here. So folks, become a P.I.L.L Method affiliate. And here's how you're going to do that. You go to my 10K card and click on, I'm going to put that on the screen here. So we're going to go through step by step. All right. And that's what it would look like. But now we're going to switch over to my screen, switch back to my screen, ice10k.com. Boom. I put it up there. And that is my 10K card. That's what you'll see when you click on the link, ladies and gentlemen. We're going to switch back over to my screen there, Kurt. Sorry about that. I'm just, we're just on the fly doing this thing. And then once you put that on the screen, so let me go ahead and I'm sharing my screen now, Kurt. There we go. All right. So, and now we got that on the screen. And if you see here, you click on become an affiliate. That's what Sean was talking about. You fill this out. It takes about 15 seconds to fill out. Put your name, phone number, email, and how you want to get paid. That's it. Put your name, email, and how you want to get paid. Sean says he's got some, we did a training last night, and we're going to be doing another training in a couple of weeks. We're going to be doing another training in a couple of weeks so that you'll be, if you want to become a P.I.L.L Method affiliate, become one now. It's free. Come to the training, and we'll give not only show you how you can make between $300 and $3,000 a month as a P.I.L.L Method affiliate, but we have a bunch of tools that we're going to equip you with to help you to become a P.I.L.L Method affiliate entrepreneur. How about that, ladies and gentlemen? I just love what we do here. All right. So I've got Miss Demetrius Curry. All right. I see you've got your workshop in here. I see the link. I hope people will click on that link and meet with you tonight. What time are you meeting?
6 p.m. Central Standard Time.
6 p.m. Central Standard Time. And you're going to go about how long? How long do you think?
We will be there at least about a good hour, and we open up the floor to some questions at the end. So maybe about 90 minutes or so.
That's what I was going to ask you. Were you going to open it up to questions? So there's going to be a question and answer opportunity.
Yes, sir. Mm-hmm.
Oh my goodness. Look at that, folks. Look at the bonus you received today. Not only did you get to hear me, you got to hear Sean 10K. You got to learn more about marketing, and you have seen the inner workings of the formula that overcharges you by 75% because it uses a step down system so it can charge you 360 times. By understanding that step down system, we can actually change what the bank sees, and the P.I.L.L Method client will generally not pay 360 charges, but they get charged maybe 89 times or 87 times or 90 times instead of 360 times, because we pay the bank when it suits us. And we can then, our program will then figure out how much you save when you do that. Oh my goodness. I'm going to give you a quick example of what I'm talking about. Miss Demetrius, how long can you hang out with? You hang out as long as you want. And if you have something you want to say, you go ahead and say it.
I am good. I'm good. I got about 20 more minutes before my 8:30, but you let me know what you need.
All right. So what I'm going to put in here, what you were talking about today. I'm putting in the program itself, the P.I.L.L Method Opportunity Cost Calculator, and what it does. So when she logged on, this is what she saw, ladies and gentlemen. She saw this video. Program updates overview. Is that what you saw? And,
This on Clubhouse.
right.
So
Yeah. Well, I know. But I have it on the screen so the people on YouTube can see it. All right. So it says program updates overview, and she watched it. It's only 5 minutes. It's only 5 minutes long, and she watched that. And we have, and then we went over some of the new things that are happening with the program itself. Okay. Now let me give you an example of what is going on here. All right. This is an example of putting 10 mortgages into one program and then a potential interest savings of $1,372,000. Can you imagine? Now, this investor, Demetrius, this investor is making a lot of money on the front end. So he's got 10 properties and he's renting them out correctly. He bought them right, he rehabbed them right, and he's renting them right. Okay. But when he found out that he was paying an extra $1,372,000 in interest that he didn't have to pay, what do you think? What do you think he was saying then?
now you know he was cussing, right?
Come on now. He says, I've been taught to look at the front end. I have not been taught how to look at the back end. Okay, what the bank was making. Come on.
And may I add a word, if you don't mind?
Please do.
So as a banker, and I started off in the banking industry back in 95, 96. As a loan officer, a loan originator, a REIT property real estate purchaser, let me tell you that the banks, and even though I have business degree, finance degree, all that good stuff, they do not teach this. And let me tell you why they do not teach this. They don't want you to cheat them of their interest. Banks make money off of the interest. And how do I know this? And listen now, I'm a lending broker. I'm not on anybody's side. I'm on the side of wealth building, wealth strategy, and what makes sense. Okay. So when it comes to figuring out what your finances are supposed to look like, and Don has been telling you guys this in his own special way, when you're actually working with numbers, you're working with banks. Banks are my friend. They actually finance my people. But on the back end of that, I'm also teaching the client, hey, now that you got the loan, plug in, strategize, make it make sense for you. Because the interest itself is where the banks make their money. Now, notice that you don't get paid any interest when you put money in the bank. So you're talking about deposits, all that good stuff, savings accounts, checking accounts, the return they give you on your money for just sitting there. So you're putting money in, not making any money return off of it. Maybe you can get a good 3-4% if you get a good online, major savings account, or money market account. However, on an average, you're not making most money on your money. That's because they're counting on you to loan and let them get the interest off of your loan. And that's how they keep themselves afloat. So what you have to do is plug yourself into this system of understanding how to know your numbers and how to beat the numbers, because this is not something that they're going to teach you. Now, as a professional in the field of banking, I've been in finance for nearly 30 years. This is not something that they're going to teach you, because it doesn't make any sense for them to teach you that or to teach their employees that, because they don't want the employees to tell their particular members, their customers or whatever, of how to beat the interest, narrowing down the bottom line of what the banks receive. Does that make sense to you, Don?
It makes perfect sense. It makes perfect sense. And it's going to lead into what you're seeing now. If you're new to the room and you want to see what I'm putting on the screen, go to YouTube right now. Go to YouTube right now. Based on what we talked about earlier, because of the bank step down system, they are charging you 360 times. 360 times. I'm going to show you what our program does instead to save you a ton of money. I want to make sure that I have all this information in here correctly. 6.5, 487,000. All right, 487,000. Okay, there we go. All right. And 6.5%, 487,000, 6.5%, 360. Okay, here's what we're looking at, ladies and gentlemen. We're going to go back to the program. All right, so the program is saying, all right, we enter in data into the program, how much money we're paying. Every time we tell the program we paid some money or we received some money. What I'm going to do now is reset this program with the 10 mortgages. I'm going to click reset account. We're going to choose multiple properties. All right, multiple properties, and we're going to reset that. Now, while it's resetting, I want to show you what happens when you give this program the money, because it understands the step down process of what the bank is doing. And it says, if you have a little extra money, if you have just a little extra money, we're going to show you how to disrupt their timing so that they can charge you fewer times. Wow, wow, wow. They're going to show you how to charge you fewer times. Now, this person's rents come in on the first of the month. We're at the June, back in June 1st, 2023. Hi, Miss Vic. So if you want to see, if you're new to the room, go to YouTube on your secondary device, search for P.I.L.L method and watch this video. All right, so you can see the video. So now they make $15,000 a month. So all we do is tell the program we received our $15,000 in rents. All right, we received the $15,000 in rents. The program says, okay, you got it. All right, and we put that in the checking account for the program, which matches the checking account of this particular investors, what they have going on at their bank. So now eventually, after you tell the program how much money you're spending on all these mortgages, mortgage number 6. Now, look here. Here's what's new. You used to have to go to the accounts to see. Now all I have to do is rub on mortgage number 6, and I can see on the first page that I owe $174,811.03. I don't ever have to do that anymore. I can just rub on it. Look at that. Good information. So now, every time we do something, we have to click execute to tell the program that we paid it, we've received our money. And then the program starts to do this. In July, the program says, you know what? In July, with these little arrows, I need you to go ahead and pay that Visa off. Okay? Go ahead and pay that Visa off. Go ahead and pay that HELOC to 0. And then take $1,936.96 and put it on mortgage number 9. Why mortgage? If they have 10 mortgages, why mortgage number 9? Here's why. I'm going to show this to you. Because if I put $1,936.96 on mortgage number 9, it saves me. I need to make this bigger because I know it's going to be hard for people to believe it. Look at that. $23,000 in interest I don't have to pay now. In other words, if I let the bank charge me every single month, like the bank wants to charge me, using that step down system, to pay my loan down by $1,900 takes $23,000 in interest to do it using their step down system. Let me show you this loan that I'm talking about. It's a $487,000 loan at 6.5%. Look how much money is going to principal and interest. Look at that. Look at that. Look at that. Okay. $440 and goes to principal. Look how much goes to interest. Wow. 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 Look at that. Isn't that something? So if I give them money, I get to skip a bunch of payments and I get to save like $20,000 in interest by giving that early because I control what the bank sees. They're looking at 487,000. They're taking that 6.5% interest that I owe, dividing it by 12. They're getting a new magic number and they're multiplying it by the 487,000. So what they want to see is what they want to see is now I owe 486,000, so they can charge me another $2,600 in interest. But if I give them a certain amount of money, okay, if I give them a certain amount of money, look here. Let's say I give them this instead. What do they see? They see this number instead, 483,410. And using that step down system, they said, well, this is going to be your next payment, where $459.70 goes to principal, $2,600 goes to interest, which means I get to skip all the interest payments between line 2. This one is gone. Line 2 is gone. Line 3 is gone. Line 4 is gone. Line 5 is gone. 6, 7, 8. 8 interest payments gone. About almost $23,000 is gone because I choose how to pay the bank back money that I owe. So what Demetrius is doing on the front end by showing you what you need to do to get the loan, the P.I.L.L method is going to show you on the back end how to borrow that money at a discount by disrupting their timing and using their own formula to work to your ends, not theirs. When you use the formula, you control the amount of money that they see and how much they can charge you because of the step down system. Because of the step down system, this is what they're looking to get. All of these interest payments. Look here, just the first year. In the first year, you could pay this loan down by $5,443.33 and give them $31,494 in interest. Look at that. But ladies and gentlemen, using the step down system, if I give them the money that they're looking for, let's say I could give them $5,443 in the first month instead of over 12 months. Then I owe this. If I could give it to them in month 1, I owe this now, $481,556.67. So let's bring up our calculator because we're almost done here today. We're almost done. Okay, so I've got that. So their magic number is based on 6.5. Okay, that would be 0.065. They divide that number by 12, divided by 12, and their magic number that they use is 0.00541, a bunch of 6s and a 7 at the end. That's what they use. Now they're going to take that number and multiply it by this because I've subtracted at one time $5,443.33 from what they owe. I control that. I gave it to them early. So now I owe $481,556. So now I'm controlling what the bank can see and therefore what the bank can charge me. And so now they're going to use that number, multiply it by the 481,000, multiply by 481,556.67, and it tells me what my interest payment will be equals $2,608.43. Here it is, ladies and gentlemen, on line 13 of the schedule. If I give them this money on line 1, the money that they were looking for to get over 12 months, and if I allow them to step this down by $440 each month, I have to pay them $2,600 each time. But if I give it to them all at once, they see the first number of 487,000. The next number they see is 481,000, and they have to charge me on that. And then they do their step down to line 13 of the schedule. What am I doing? I'm compressing the amortization schedule. I'm taking their schedule and I'm compressing it. I'm taking their interest money and I'm compressing it from $31,000 in interest they want to charge me to only $2,600 in interest. They wanted to charge me $31,000. They're only going to get $26,000 to do the exact same work, to pay this down by $5,443. Using the step down system, using this formula, ladies and gentlemen, when we get to use this formula, I'm going to put that formula back on the screen. Here's the amortization formula. By using that formula, we can control what the bank sees. We can control what they get to charge us on. They said, doggone it, I wanted to charge Demetrius and Nabia and Don and Medina and Miss Vicky, and we wanted to charge them 360 times. But doggone it, they watched the P.I.L.L method and found out I can only charge them 78 times now, or 90 times, or whatever, but it won't be 360. And you're going to pay a lot less interest because of it. You owe the money, pay it back in your own timing. Do I have any comments about what we just talked about today? Miss D, what do you think about that?
Oh my goodness. So you've laid down the law once again. You laid down the law once again, Don, because I mean, the formula, you know, I'm about numbers. So the numbers just make sense. And it's all about trying to make sure that you are on the winning side of the transaction. So we all want to buy property. We all want to, you know, make sure that we have nice homes and rental properties and things of this nature. But paying out more than you have to just doesn't make sense. And so I love the P.I.L.L method system. It's a database that we use every single month for what we do in our, you know, investments and also for our personal property. So absolutely. I mean, you can't get no better than that. I'm so thankful that you pulled this together and sharing it with so many, because I actually can see me paying off stuff so much faster. And I have paid off credit cards, student loans, and all of that using this very method.
Okay, so now using this very method, okay, now you're building a new house.
I am.
Okay.
Mm-hmm.
And the house that you were in when you came on the P.I.L.L method,
Mm-hmm.
did the P.I.L.L method cause you to have more equity in that house sooner?
Yes.
At a more at a lesser interest cost?
Much lesser interest cost. As a matter of fact, what we did, and Don, you know how private I am, but this is, I'm gonna tell you my business right about now. So what we did, we bought the property for about $400,000, and then we just made regular payments. We just followed the step-by-step system until we found P.I.L.L method. I would say about 3 to 4 years in, we found that we had over $200,000 in equity.
What?
Yes. And so what we did with that money is when we sold the house back in June 2022, when we sold the house, we did more than one transaction. We first did a HELOC on the home.
Oops.
Before we, and then we took out 150 of that 200,000.
Now, can we talk about that just for a second? All right.
Yeah.
Okay. When you were thinking about talking about the HELOC, did you talk to a P.I.L.L method coach about how to proceed with the HELOC? You see, the P.I.L.L method is not just the software. It's not just the computer program. It's about getting good coaching about how to set all of this up. Keep going.
Yes.
Keep going.
Yes. You were my first call. And I said, Don, this is what we're thinking about doing. Your thoughts. And so we went ahead, took out the 150 equity of the 200,000. We were searching for some land to buy. Found 3 acres that we wanted to buy to build a basement walkout property. We paid for the property, cash money with that equity. Then we sold the house. And we was able to sell the house for $628,000. So we took that.
What?
Yeah. And we put the rest of that into our bank accounts. So we'll be ready for this next home build. So we already bought the land. The land is ours. We're trying to decide when we wanted to build. So we've had the property since 2021. But we sold the property in 2022. We did the equity line in 2021. We did it beforehand, knowing we was going to need that money to buy our own land.
Okay, now Demetrius, listen. I know I maybe I shouldn't ask this. All right, but I know you know. You don't have to divulge it if you don't want to. But if
Okay.
you were buying that land today, how much would you have to pay for it?
Property now, it costs about 60% more.
Wow.
Now.
Wow.
Yeah, it costs about 60% more. The lots next to us, each of those lots are 3-acre estate lots.
Mm-hmm.
So the lots to us that are currently for sale, most of them are already sold, but the one that's directly next to us is about 60% more than what we bought it for in 2021.
Oh, so by creating equity faster in your current property, by understanding the bank step down system where you could get equity faster and cheaper, put you in a better position to purchase that property back when it was 60% less, and now getting ready to build your house on it. And now it's worth 60% more. Is that what they call equity?
Oh yeah, absolutely. Look, Don, and let me tell you what else I did.
Come on.
When I negotiated this new property build out, I told them, I said, listen, I own this land. Now, typically, when you go to they don't want to give you back your money on your land. They just want to roll it all over into one loan. They want to make sure that, because the house is being built on the land, so it becomes one loan, right?
Right.
One loan, because it's whether you own the property or not, or if they buying the property for you and putting it in with the loan, it's still one loan. So when I went to the loan officer, I said, listen, I'm a banker. I'm telling you what I know we can do. I want my money back for my land.
Oh, what?
If you're going to actually hold my land hostage and put a lien on it with the house that you're building, I need you to build into my loan a reimbursement of the money I pay for on my land.
Oh my goodness. Break that down. I just listen, I know what you just said, but break it down anyway for the audience, because this is huge. This is huge, everybody. Listen up.
Yes. So typically they won't do that. So they have to go to VP and president and they say, hey, we don't normally do that. I get it, but I'm not saying that it cannot be done. It's just you guys normally don't do that. So she said, well, you're walking into your property already with equity because you already own the land. Absolutely. So when we can do 2 things, we can give you back on the construction loan on your very first draw. We can give you back the money that you spent on your land, or we can wait till that property has been already built and new appraisal will apply, and we can give you the cash out for your land at the end of the loan. Either or, which one would you like us to do?
Wow, wow, wow. I want to keep going. Keep going.
Yeah, essentially they're rolling that over into the loan. If you look at it in a broad perspective, essentially they roll that over to the loan. But what could you do with $200,000 cash that you had gave up? How can you maximize that 200 to beat out whatever financing they have by investing it into another 2 or 3 more properties, cash flow properties?
Mm,
right?
mm. So in other words, what you're doing is
Mm-hmm.
I got my cash out and I let
Mm-hmm.
the bank that's financing my house, I made them pay you, right? Then you
Mm-hmm.
got that cash out. And then what you did was I'm going to develop some more investments
Mm-hmm.
because, here we go, folks. Here we go. Let's get ready for this. Okay, here it is. Here it is. I'm going to develop
Mm-hmm.
other investments so my investments will pay for my current living situation and I don't have to use my income to do it.
Absolutely.
Oh, Lord have mercy.
Absolute. I told you I was a strategist, didn't I? Absolutely.
So listen, ladies and gentlemen, the P.I.L.L method is not just about how to pay off debt, it's how to create wealth think of this. I just need you to think of this. All the money that people are paying the banks right now, all right? You can't pay that interest and also invest the interest because you paid it. So what she did was created equity with the P.I.L.L method, tipped that cash out with a HELOC, bought some property, and now when it's time to build a house, give me my money back so I can invest it so that I can use the investment income to pay for the new property I'm building now. Listen, folks.
Exactly.
So if you look at it, if she had paid that money in interest, she wouldn't have had it in equity. One more time. If she had paid it in interest, she wouldn't have it in equity. So she literally took the bank's interest money, created equity with it, took the equity out, paid for another property, made this bank give her the money back, and she's going to invest that money again. Lord, have mercy. I love it. Love that strategy, Demetrius. Oh my goodness. Oh my goodness. Ian Pedley from Australia says, yep, we can do that here in Australia. He says, so pay down the loan quicker, builds up equity quicker. You can then invest built up equity to allow future investment. Buying now, and as prices increase, you win more. Not only that, but you reduce the amount of interest that you pay and you take that money that the bank, this formula, ladies and gentlemen, that I have on the screen right now, it is designed to take your wealth and transfer it to the banks. But when you learn how to read their step down system and control what they see and what they can charge you on, you can take your money that would have paid for interest and take it to create principal pay down, creating equity, take that money out and use it again. Oh my. I love it. I love it. I love it. Demetrius, you have been a joy this morning.
You're so welcome. And I'm usually not on Clubhouse. So I know you've been saying, hey, you need to get on here Clubhouse with me. But I just so happened to see you pop up this morning. So I'm glad that I did pop into the room. Thank you so much for having me. And anyone that needs some help or assistance, hey, I hope I see you tonight at the Hidden Money course. The link is in the chat. We're going to basically go over quite a few things as far as making sure you look good to the lenders. I want to make sure that you look exquisite to the lenders by the time that you get ready to put in the application. We're going to help you get that done. Don and I team up. So, anytime that you need anything, just let me know and we'll go from there. Okay.
All right. I put that link in there one more time in the chat, ladies and gentlemen. So listen, get there. Demetrius is a wealth of knowledge. She'll be able to help you to see on the front end what you control, what the bank sees, you get the money. On the back end, you control what they see, and you can cut your interest costs by 75% and win on both ends. I absolutely love this. Folks, we're going to get ready to get out of here. I want to thank you for being here today. We're going to be right back here on Friday to do it all over again with a brand new subject so that we can help you to understand what's going on. I've got Kurt Nugent. That's Kurt. Are you getting ready to come online with us? I don't know if you are or not, but if you are, you can go ahead, Kurt. You can always hop in here. Kurt, what do you have for us today?
Hey, Don, I just wanted to jump on for a second, man, and say one thing, literally just one thing. You've had a phenomenal show
Thank you
already, but I just wanted to say this one thing, man. I have absolutely enjoyed being your producer for these where are we at here? 252 shows, and Don is taking the reins. He will be producing the show himself on, is it Friday? And
yes.
To say a word to say thank you for your consistency. Thank you for your relentless pursuit of sharing what God has put in you with the world. And I myself and my family are beneficiaries of it. We are P.I.L.L Method clients. We have coaching. We have all the things that the lady that was on today, who very eloquently shared all the benefits of the P.I.L.L method, not just the opportunity cost calculator, not just how to get out of debt or how to pay it off and increase your equity and all those good things, but the fact that it is a wealth of knowledge. And just like our faces differ, our fingerprints different, so do our financial needs and our financial strategies. It is not cookie cutter, it is individual. And that's what Don and the P.I.L.L method do. And so I just wanted to come on as we get ready to land today to say a word of thanks to you for trusting us here at Composition with your show and making it all that it is. And we're excited to see how you're going to take it to the next level as you launch into producing it yourself here starting in September. So I just want to say that as we get ready to close it out today, Doc.
Man, I appreciate you. Listen, because you were there in the back end while I was, learning how to push the buttons and everything. It allowed my brain to be free to come up with more ideas to share with the people. Now that we have a ton of content and even more content, more content is coming, because this show that I did today, all right, we've done 200, and this is 252.
That's right.
Have I ever broken down the amortization formula before? This is brand new content, isn't it?
Completely new.
Come on.
Completely new. I was watching today. I was like, this is and I've seen them, right? I don't know how many others can say that, but I've seen them. And this is new today. This is new today. So I am excited for you, man. Some people, let me just say this. I get a chance to coach a lot of people, and I see them, leave the nest as it were. And I've shared this with you before, Don. It's not meant to be a permanent solution. I mean, a permanent scenario. I believe that live streaming is going to be much like getting a driver's license. There was a time where it was only a few people that drove. And so the rest of us kind of used to go into the car and ride along to wherever it was we wanted to go. But now it has become ubiquitous and everybody is able to drive. In fact, we're now giving driving over to AI. But the whole point is live streaming and its benefits, right? Its benefits, the places you can go, the people you can reach, the oh my word, the impact that you can have is exponential with live streaming. So I just want to encourage somebody, as you have seen Don's story and his trajectory and his path and his journey, to sharing with people and impact. Look, I mean, even the people that he just had on the show today, these are people he would never have come in contact with were he not a good steward of what God has given him in terms of this method to be able to not only pay off your mortgage in 7 years, but literally change your financial stripes forever. We're talking about generational wealth. This is something that he is laser focused on, and we want to make sure we share, we honor that today. And I'm saying to the rest of you, go get your license, okay? Go get your live stream license, not your driver's license, your live stream license. And if you need a driving coach, right, definitely check me out, kirkrnugent.com/card. That's my card there, and I would love to be able to chat with you guys 15 minutes to see what it is you have that you want to put out in the world, and maybe we can work with you to get that done, just like we did with Don and the P.I.L.L method. Don, again, I'm going to be watching because I watch.
I appreciate
we're
it.
Partner on a number of different little projects here or there, but I am excited to see how this space that you've created, Sundays, Wednesdays, Fridays, is going to continue and go to the next level, even as you take the reins for yourself.
Listen, Kurt, I want to thank you for teaching me, for training me, for your expertise. I remember the first time I saw you online, I said, I know that guy. And I want to be able to do what you did. You helped me to set up the studio. You helped me to set up the lighting. You told me what to buy. We got all of these things going. We figured out how to simulcast to Clubhouse and
yes, sir,
do the live video. And listen, we worked that out together, man. We worked that out together. We didn't know how to do that. So Kurt figured it all out.
Yeah.
And now we are here.
That's right.
Now we are here, and I'm graduating. I'm graduating today.
I love it. I love it. I love it, man. I love it. I love it. I love it. And
so I probably stayed in the nest longer than most people, but I appreciate you being there for us, and it helps. So folks, I put that link to Demetrius's program in the chat. I hope it works now, because I think the first time I did it, it didn't work, but I pulled it off the internet. And I hope it does work. You may have to copy it and paste it or whatever, but there it is for you in if you're live. It's also on Clubhouse as well. So folks, we're going to wrap this thing up. I want to say to Kurt, I put his card in the chat as well, but he has it right there on the screen for you. kirkrnugent.com/card. If you are interested, if you want to get your message out on live stream video, as we have done for 252 shows now, you can contact Kurt. And Kurt, what will you do for them? What will you do for them?
Listen, we're going to talk about what your vision is. We're going to talk about who you want to reach, and we're going to craft a show that allows you to do just that. That is exactly what we do here, and we're excited about it. We love that stuff, especially as we see passionate people like Don. I think, listen, that's the missing ingredient. You can't teach that. You can't teach that. That's not taught. That's a component that Don brings to the table that you cannot teach. But as we see people who are passionate about what their message is, we want to give them these tools to be able to get it out there to a broader audience. Not so much that what they're doing now is not working, but when you recognize that this is too good for me not to put it out there at a broader scale, that's what we want to do with you with live video. That's what we want to do with live streaming, and we want to make sure you get your driver's license. Don, thank you so much. This has been absolutely phenomenal.
Listen, it's been a joy. It's been a pleasure. Thank you so much for being here. And ladies and gentlemen, let's give Kurt a round of applause here.
I received that, man.
It's kind of a bittersweet deal.
It is. But I look at it as this is a positive thing, man. This is the way that it goes, right? I was sitting there at a church or on campus a couple weeks ago and seeing all my friends from college dropping off their kids, and they're proud of them. But they had tears in their eyes, but they're proud of them. It's just one of those things. This is the natural order of things. It's like, see that kid take off in the car by themselves. They don't need you to drive them anymore because they're driving themselves. That's the natural order, and I'm proud. I'm excited to see this happen. So, Don, I'm excited for you. I'm not going to say any more. We've beat the dead horse, so I'm done, man. But I wanted to say, man, you keep on blessing the world with your genius, my friend. I'm excited to see what you're going to do.
Ladies and gentlemen, so listen, we're going to say goodbye. We've got one last thing to share with you. We're going to tap out with E.T. the hip hop preacher.
That's right.
And he is the #1 motivational speaker in the world.
In the world.
Kurt helped me to put the live stream together when we had him speak for us in Nashville. Kurt was right there, producing the live stream for everyone to see, and it was gorgeous. Thank you very much for that. And so we're going to say goodbye to Kurt Nugent. But please don't let this be the last time you touch base with him. All right, touch base with him. He can help you to do what we have done here. So we're going to say goodbye, but we're going to be back here on Friday with me at the helm running the show. And we're going to keep on keeping on with what Kurt has taught us and what he could possibly teach you if you're interested. So folks, go ahead, Kurt. Let's play that, and we're going to say goodbye to everybody online. To see you on Friday. We will be right back here again with more valuable content. See ya.
Take care.
Listen to me, y'all. But one of his mentees took us through one of their programs, and I paid off my mortgage. But guess what happened? My marriage went to a whole nother level. And you know why? Because my wife is a security freak. And even when I blew up, my wife would be like, oh, you blew up, but how long is you gonna keep making this kind of money? I was like, I don't know, forever. She's like, you sure? Because I'm gonna keep my license as a nurse just in case you don't. So when I paid the house off, my boy was like, you ain't gotta do that, you can do this. But when I paid the house off using that program, it took the stress level all the way down for my wife because we no longer had a mortgage. Does that make sense? That thing that was coming every month, that was getting on her nerves, we didn't have that no more. And so she was at rest.